Thanks for joining us at XM.com for this preview video. The latest economic data reinforces the view that the U.S. economy is in far better shape than that in Europe and China, with investors turning their gaze this week to the latest inflation report out of the United States on Wednesday. I'm Cristina Marujas. With me today is our senior investment analyst, Mario Sotiriakos. Forecasts, Marios, are pointing to a slight increase in the CPI for August, but looking at the big picture, is that something that should worry markets or even add to further Fed rate hike bets?
Hello, Christina. I doubt that this inflation report is going to change what the Fed will do, especially this month. They've signaled that they are probably not going to raise interest rates, but it could matter for the dollar. So let's unpack that. It seems like inflation reaccelerated in August, as you already pointed out, but that's mostly because of energy prices. So the headline CPI rate is expected to have risen from 3.2% in July to 3.6% in August. But that reflects mostly the sharp increase we've seen in energy and gasoline prices lately. Because the core rate, which excludes energy and food items, well, that's expected to have declined quite substantially. So even though headline inflation is moving around with what energy prices are doing, it seems that core inflation continues to decelerate in a steady manner. Now, don't get me wrong, core inflation is expected to remain above 4%, so that's going to be worrisome for the Fed, but it's moving in the right direction, at least. Now, how could this data set affect the dollar, Christina, is the real question. It's really going to come down to any surprises. So are we going to get a hotter or a colder than expected inflation report? Well, I'm in the camp that would expect a hot, if anything. If we see any surprises, I think it's more likely that we see an upside CPI surprise. And that's mostly because of what business surveys showed during the month. If you look at the ISM surveys, the prices paid components rose quite substantially. So that tells us that costs for businesses went up during the month. And similarly, we have the Cleveland Fed nowcast model, which basically tries to forecast inflation on a month-to-month basis. And that model points to a serious upside surprise relative to the official forecasts. Now, we have to take this model with a grain of salt. It's a narrow model. It mostly focuses on energy prices, so we shouldn't put too much weight on it. But it's one of the only real-time inflation trackers that we have, so we don't have much else to go on. So is this data set going to change much? No, even if we see a minor surprise, I think the Fed is almost certainly going to remain on hold this month, and then they could raise interest rates again in November, depending on the data, but they've clearly signaled that they want to take a brief pause and examine incoming data before they make another move.
I see. Now let's turn to the dollar. It has been holding strong in the latest sessions. How could we see it perform this week on the CPI data?
Yeah, so as far as the dollar goes, I think that the outlook is positive, and I don't think that the CPI data, even if it comes in disappointing, even if inflation is colder than expected, I don't think it changes the positive outlook for the dollar. Now, here's the thing about the dollar. The dollar currently has turned into what I call an all-weather currency. It offers attractive interest rates. It has safety because it's the world's reserve currency. Every time we see, a sell-off in the stock market, the dollar benefits through the safe haven channel. And that stands, and of course, the US economy is far stronger than its rivals at this point. So if you just look at economic data, it's pretty clear that the US economy is doing much better than any other major economy. So the dollar has attractive economic growth, attractive interest rates, and that element of safety. Now, contrast that, Christina, to other currencies around the world. Let's take the euro. If we look at business surveys, so the European economy barely grew in the first half of the year, and business surveys suggest it might be entering a technical recession in the second half of the year. So the euro has been ravaged because has been falling lately because economic growth in Europe doesn't look so attractive. China is going through a similar crisis. It has the problems in its manufacturing and its property sectors. The Japanese yen has been devastated by interest rate differentials because the Bank of Japan continues to maintain negative interest rates. And the British pound is trading mostly like a proxy for stock markets. So it follows stock markets up and down, and that leaves it vulnerable to any shifts in a risk appetite. So if you just look around the Forex arena, most options seem unattractive, and the dollar seems to have all of the attractive elements right now, and that I think is going to be a force that might help the dollar extend the recent rally that we've seen.
Marius, thanks so much. This was a preview video. Thanks for watching at xm.com.